Prepare for negative interest rates here in the United States. A former Fed president is calling for negative interest rates in the U.S. as well as the current U.S. president. Negative rates, do debtors get paid to take out loans? And the Fed axes account withdrawal restrictions. We're going to talk about what that means, how it relates to negative rates. And finally, need a loan? War on cash. We're going to talk about what that means. Hey everybody, JJ here. Bull, boom, bear, bust. It is Saturday, and hope everyone had a good week and is having a good weekend. Now, while nobody has a crystal ball to know exactly what's going to happen, we do think that you should prepare for negative rates, and we're going to, I think, give you some good information today. And today we're just going to touch on the most frequent questions that we see regarding negative interest rates. We're also going to show you the chatter out there on why we need negative interest rates. So when I say prepare for negative interest rates, we believe it's going to happen. My crystal ball says yes, negative rates are going to be coming eventually in the U.S., but nothing's guaranteed. Let's go ahead and get started. Now let's start right here. This is the effective Fed funds rate, and this takes us through all the boom and bust cycles. We can see the recessions here in the darker shaded areas. This was the 2008 financial crisis. And then we look to the far right and we see that we're not far from zero right now. So for the people out there saying that the U.S. is never going to go to negative interest rates, well, ask yourself, we've already dropped rates to near zero. What's another fraction of a percent drop into negative territory? Why would that be surprising at this point? But let's look into this recent article here. A former Fed official says U.S. central banks should do the formerly unthinkable, take interest rates below zero. Now, it's not unthinkable if you've been watching this channel. We've been predicting this for many years. The Fed has nowhere to go. Sure, they pretended they could raise rates, a year and a half ago. That did not go too well, as we saw a surge in consumer loan defaults and a huge sell-off in the stock market. I think the stock market was a little less manipulated back then than it is now. But nonetheless, it did cause some pain, so the Fed had to reverse course and go ahead and resume cutting rates. So we believe they will continue. Well, let's talk about this former Fed president out of this Market Watch article. Now look at George Washington's expression. He looks very, very disappointed. What have you done to my legacy, he says. You have printed me into oblivion. You have tarnished and destroyed my good name. Pretty soon people are going to be wiping their you-know-what with me. I'm going to become toilet paper when you're finished. All right, I'm sorry, everybody. I get a little bit weird on Saturday, but let me pull up a different image here of this dollar bill, George Washington. All right, I'm just going to save this image here real quick. We're going to bring it into the shot here, and I do see a difference here in George. Look at his face there, the original. Look at him now. He is visibly upset, and his eyes are a little bit glassy. It looks like he's been doing something, if you know what I mean. All right, well, thank you, Market Watch, for giving us this photo of George. Okay, sorry, focus, JJ, focus. What I wanted to talk about, unprecedented situations require unprecedented actions. That's why the U.S. Federal Reserve should fight a rapidly deepening recession by taking interest rates below zero for the first time ever. And that was the former Fed of Minneapolis president and 56-year-old economist. And I'll try to get her name right here, Narayana Koker-Lakota. Well, let's take a look at what she's saying here. Let's look at this quote here. Potentially rapid disinflation. So there's another Fed person out there, former Fed in this case, saying that deflation is bad. Falling prices are bad. Deflation is bad. We need to keep the bubble inflated. But that's not what we need. We need deflation. Deflation is good. When prices are too high, unless you're selling, then it's typically not good. Now, it's good for the banks because the bigger the loan balances, the more money they make in interest, obviously. Right? So again, if you're selling, it's good. You make more money when you sell with higher prices, inflated asset prices. If you're a bank, higher prices are good. You make more interest on the loans. If you're a consumer, not so good because you have to pay higher prices. Who wants inflation in gas, for example? Gasoline prices recently crashed, and that was deflation. That was good for the consumer. The problem is now they're going to be looking for bailouts in the oil industry and many other industries, but on the topic of gas, the oil industry were likely going to be bailing these oil companies out, many of them, probably not all of them. Remember, the government gets to pick now the winners and the losers, who gets the bailouts and who fails or who gets bought out. So the consumer, lower prices are good. The problem is a lot of consumers that like lower prices also work for these companies that are going to get bailed out or they'll be allowed to fail, right? So it's a contradictory method that we're looking at here. On one hand, the consumer likes lower prices. Who wants to pay more for gas? Not many people. But the result of deflation in oil prices also means that companies are not going to make as much money and some of them may fail. And along with that, that takes jobs with it. So who do you want to help? Do you want to help all of the consumers that have to buy the gas and keep prices lower? Or do you want to help the companies? That way the employees of those companies can keep their job, and that way you're helping some consumers, but you're hurting all the people that have to buy the gas. Right? So of course banks, including central bankers, and that's why you hear these former Fed officials, these former Fed bankers, rallying against deflation and urging more inflation or trying to keep the bubble inflated. Right? The Fed, they are bankers. Banks love asset bubbles. So there we have the Fed business model. Also, inflation versus deflation, that's also subjective. Deflation, lower prices, for example, lower oil prices, great for the consumer and people that buy gasoline for their vehicles. Not so great for the oil companies, right? So you're always going to have conflicts of interest when it comes to prices. One of the problems comes up, though, that a lot of people work for these same companies. So when you let companies fail, you're going to see job losses. And you know, when it's time to do bailouts, they're always going to hold that up as the excuse or a reason for the bailouts. They're going to say, all these people are going to lose their jobs. We have to bail out these companies. Okay, next bullet point, negative rates. Does that equal debtors getting paid to take out loans? Well, it would be if banks were to be that friendly, and let me explain. Just because the Fed and the overnight lending rate, the Fed funds rate, is below zero, doesn't mean banks are going to give out loans below zero. But it does mean that they're likely going to charge you to keep a deposit at the bank. They're going to charge you for your checking account and your savings account. And we're going to talk about what the Fed recently did related to that. But no, just look at an example right now. Look at the Fed funds rate near zero. Is anyone paying a 0% credit card rate without it being a temporary like balance transfer special offer? No, the average credit card rate is about 17% right now. All right, so negative rates do not equal free loans or loans where you get paid unless the bank's going to be that nice, which I kind of doubt it. Remember, it's typically a profits over people financial system that we're in right now. So no, not getting paid to take out loans unless you find a really nice bank. If you do, please let us know down in comments so we could all go and take out a loan at that bank when negative rates get here. Or post it over at Twitter, and follow me at Twitter if you haven't done it already, please. Also, related to the negative interest rates that likely are ahead of us, the Fed axes savings account withdrawal restrictions. Also, many people are pointing to this latest action by the Fed as an indicator that negative rates are definitely ahead of us. The Fed eliminates savings account transfer limits. There used to be a limit of 6 withdrawals or transfers in and out of a savings account. That has since been eliminated. You still could have exceeded 6 prior, but you would have had usually a penalty to pay. Now, it's my opinion that this is going to be minimal impact to the consumer because most people use their checking account for deposits and payments and more frequent transactions, and they'll use their savings account less often versus checking account typically. Now let's wrap it up here with this last bullet point. Need a loan? War on cash. It equals war on cash. Now, as we talked about in previous reports, getting a mortgage now is going to be much more difficult. Banks, lenders are raising their requirements and their guidelines. The credit score requirement now is a higher credit score. It's much more difficult now to get a loan. A lot of people are going to need a 20% down payment because of the tightening of these lending guidelines. So those potential loan borrowers with a big down payment with cash are going to more easily find mortgages and they're going to be more easily approved. But those that took their money out of the bank to avoid the charges that are going to be charged by banks to hold your money because of negative rates, it's going to be much harder to verify that you have the cash when it's out of the banking system. So that's going to be one factor that's going to incentivize people to keep their money in the banks, even though they're being charged a monthly fee because of the negative rates. Now remember, all of this insanity is only made possible via the fiat monopoly money banking system. Please talk to your friends, relatives, and neighbors about this system and try to spread the word, and maybe even point them to our videos if you would be so kind. Thanks everybody for watching. Hope everyone's well. Please come back to the channel for more economic financial news. Thank you very much. Bye for now.